Hello again, and welcome to Section 3, When to Exit Early, Reactions versus Retracement. Okay, now that we know what a reaction is and what a retracement is and what they mean to our trading, let's talk about a couple of other things. They're kind of related. They're not the same thing, but they're kind of related. But first of all, I always talk about switching back and forth to your line charts to improve clarity. Now we have our breakout here that we discussed, but now let's go to our line chart, and we see here that that next move was another mini breakout, and we switch back to our candle, and we see here that here is our breakout bar, and here is our reaction bar. Oops, sorry about that. Here is our breakout bar, and here is our reaction bar. Let's go to our line chart again. We see here another mini breakout here, and we see our breakout bar here. And where did our reaction bar fall down to before it continued up? Because the reaction bar doesn't always close down. Many times the reaction bar will hit that next red bar or hit that support bar and then continue to move back up, all in the same bar. So don't assume that the reaction bar is going to close down on a bullish breakout, and don't suppose that it's going to close up on a bearish breakout. But we see on this breakout bar we closed here, and let's see where we pull back to. And we didn't on this one, we didn't pull all the way back, but we pulled back to this bar here. But we didn't close above this bar, but we stayed within the range of this bar. So we may have missed an entry on this one. It just depends on how conservative we want it to be. And I know that I would have missed this bar here, because that brings us to our discussion of target and setting our target. Now, on our initial breakout here, once we have our breakout, where do we want to look for our target on the way up? And we want to look for the first green bar that's overhead, and that's going to be this bar here. Now, why wouldn't it be one of these green bars? Because we've already broken and closed above. See here, we closed above these two green bars, so they are now discounted as far as our target. We want to look at this bar here and consider the bottom of this bar his butt, his booty, and the top of the bar his head. Okay, on the way up, if we don't see his butt, then we're not considering that bar as the target. See, so when we look at these two green bars here, we're above his butt, we're somewhere in the middle of his body. We only want to concentrate as far as what's above his head here, and that's going to be this bar here, and that would be the most conservative place to set your target. But in reality, the true target is this swing bar here. See, because once a move starts, a market will move from swing bar to swing bar. Now, after our breakout, the very next swing bar that's over our head here is this swing bar here that started this bearish downswing from this bearish pivot. So on the way back up, look for the first pivot overhead that brought price down to the level where it's moving up from. And it works the same way on the way down. On the way back down, you want to look for a reversal or price to at least stop and pause at the next swing bar on the way down. And we'll get into that, the down moves, a little bit more later, but for right now we want to nail down the concept. So, but you already know that everything works the same, just in reverse. So if we look at where price went, this is the bar that both hit the butt of this resistance bar overhead, and it also went into the range of this swing bar from this bear pivot here. And I hope that makes sense. But also I want to clarify something else too. And when I talk about inside bars and spatial analysis, and we look at this bar here, and the bar that follows it did not close above the high, so this is an inside bar to this bar. Now we don't know it's going to be an inside bar until a bar closes on the inside of it. And once again, this is mother, and mother is pregnant with, she has a whole litter of babies in this grouping here, all the way down here. As you can see, that our range is going to be from here to here. And now when you see this, this is called a consolidation. When you see a consolidation in works, and consolidations usually occur as inside bars, you don't want to really consider trading this because the range is so tight and so small, and you don't want to, you know price is not really going to make a serious move until it breaks out of one side or the other. But if you were going to trade an inside bar, let's just say you wanted to take a chance and trade an inside bar, well, since this bar is green, if it's green, you know the bottom is going to serve as strong support. If the inside bar is red, then you know the top of the inside bar. If it's red, the top of the inside bar is going to be strong resistance. So if you're going to trade an inside bar, now this is an up or green inside bar, so you would want to buy, you would want to go long at the bottom because it's support. But now if it was red, and I don't have one really right in front of me right now, but you can look on your charts and you'll be able to see the same thing. But if this bar is red, then you want to go short at the top. You want to go short at resistance. And that's really everything. Anytime you're trading, you only want to go long when you're at a bottom support level, and you only want to go short when you're at a top resistance level. And I think that about covers it for now. And I'm sure you'll have questions, and of course you'll be able to ask me as far as fine-tuning what we've talked about here in this segment. So I'm going to end segment 3 here on when to exit early, and always remember reaction versus retracement, and you want to enter on the reaction or after the retracement. That's all for now. Thank you. This is Jerry, ForexTradingMagic.com.